Hi, Steve Nison here, president of candlecharts.com. In this short video clip, I'm going to give you the basic construction of the candlestick lines and the benefits you're going to get from using candlesticks. As the first to reveal candles, and by the way, I use the word candles and candlesticks interchangeably, as the first to reveal candles to the Western world, I've helped countless thousands of traders to help improve their trading using our education. I'm dedicated to giving you the correct candlestick training with what I call Nison candlesticks. Candlestick training the right way. After all, you have candles in every platform. Why not learn how to use them correctly? As Scott so nicely said, I was very flattered by this, everyone that teaches candlesticks quotes the master. Why not go to the master? I've been asked by the top trading firms and organizations to teach them candlestick charting. In fact, I have an interesting story. I was asked years ago by the Federal Reserve to do a seminar for them. And after I did the session, I asked the audience at the Fed, why did they have me there teaching them about Nison candlesticks? And they told me that so many institutional traders who I worked with were using my candlestick strategies that they, the Fed, wanted to know more about them. Now I'm revealing the same strategies I've taught to the top institutions to the general public. And this is why there's so much buzz about the candlesticks in the media. The Japanese have a wonderful proverb that says, without oars you can't cross in the boat. And what we're going to do in this video is just go over the basic construction for those new to candles to show you not only how easy they are to use, but how beneficial they are. So, the candlestick line is made of two components. There's a rectangular portion called the real body, and the real body could be black or white, and the real body is the relationship between the opening and the closing. If the close is higher than the open, okay, we have an empty or white real body with the top of the white real body the close of the session and the bottom of the white real body the open, and it doesn't matter what time frame you're looking at. And a black real body means that the close is under the open. The lines above and below the real body are called the shadows. So the top of the upper shadow is the high of the session, and the bottom of the lower shadow is the low of the session. Now, as the real body gets smaller and smaller, we wind up with what are called doji. These are sessions where the opening and closing are the same. They look like crosses. And a doji will tell us, the Japanese would say, for example, the market is tired. Now, the Japanese say the power of the market is reflected in a single candle line. And let me show you what that means. Who's in charge here with this tall white real body where the market opened on the low and closed near the high? That's right, the bulls. Okay, obviously the bears are in charge here. Now, when we have doji where the opening and closing are the same or nearly the same, there's an equilibrium of forces between the bulls and the bears. And with the doji, the Japanese will say the market is tired. Now, before we delve into using candlestick lines in some actual markets, let me just remind you that candles can be used in all markets and all time frames. Okay, so that includes stocks, options, forex, ETFs, whatever market you're looking at, you can use candles as long as you have an open, high, low, and close, no matter what time frame. And although the candlesticks are very simple to draw, we're going to look at how powerful they are in helping you quickly visualize and analyze who's in charge of the market, whether it's the bulls or the bears. And that's because of this. As shown on the header or the title of the slide, candles give you twice the information. Candles, like a bar chart, shows price. Remember, the candlestick line is made of the open, high, low, and close, as is the bar chart. Okay? But, and this is the pivotal aspect, this is the reason why candles are used by the best traders and active investors. The candlesticks reveal the force of the current move, or the lack of the force. Okay, we'll look at an example of that in a minute. But how many of you feel like this when you're trading? Right place, right time, 2 exits back. Well, what we're going to look at is how candles, one of the major benefits of candles, is giving you those early reversals. Okay, so for example, here in Google, and this is a great example of using candles in any market. You know, Google, as such a high-priced stock, is very popular on the option side. So if you're an option trader, you could use this for timing, or if you trade outright. But let me show you an example here. So here, Google made a new high close for the move, and normally that would be bullish, okay? But with the Doji, the Japanese would say the market is tired, and one of the popular Western indicators. Now remember, because the candlestick lines use open, high, low, and close, you could use all Western tools. A popular Western indicator, and don't worry if you don't know how to use this, just to give you an example of how candles give you early reversals, is the popular Western indicators, a MACD, and you get that signal where a bearish signal when the line crosses, the blue line, the signal line crosses under this line here. And so you would have gotten the reversal signal with a Western indicator down here. But your potential reversal indicator with the candles came all the way up here. So essentially, by using candles, okay, that would have been an extra $27 per share, either as profit by getting in on a new short position, or if you're an option trader by buying puts, or as a signal to exit on a outstanding or a current long position. Remember, most Western indicators, and they're, I certainly use Western indicators, and you should as well, and we'll discuss that in future education, because if you have a Western indicator confirming a candlestick signal, the odds of a turn are much higher. But Western indicators such as this are derivative of prices. Candles are pure price action, and that means the earliest signs of potential reversals are made with candles. And as shown here, the market made a new high, but the candle gave us a warning not to be adding to long positions here because the market is tied with the Doji. And as shown on this cartoon I had made up, it's not only how much money you make at the end of the day, but how much money you didn't lose. And here is one of the key reasons to understand why candles work. This is one of the translations I had made from the dozens of books I had translated. Combinations of bullish and bearish candle lines indicate the direction of the market and investors' psychological conflicts at important turning points. The candle line lets you read the psychology of the market. Okay, so let me show you an example here. Here the market broke above a resistance area shown by this red line, and on this tall white candle, it's a bullish breakout. Now, using the insights that candles give us twice the information as a traditional bar chart, we have the price here, right, as we would in the bar chart, but look at these candlestick lines, these small real bodies. Although the market here is holding the highs very well, okay, these small real bodies are showing us that the bulls no longer have control of the market. There's more or less a battle going on between the bulls and the bears. What does that mean? It means the odds of a turn have increased. And when we're trading or actively investing, we're looking to get the percentages on our side. So we should know here that although the market's hovering near the highs very well, we should not be adding to long positions. And this is what happened after. Now, of course, every time you have small real bodies or doji, doesn't mean the market's going to go from up to down. But once again, we're playing the percentages. And what the candlesticks let you do better than any charting method is let you read the psychology of the market. Okay, every candlestick line tells a story. The bulls are in charge here. Now the market is more or less in a state of balance, increasing the likelihood of a reversal. So what we've done in this brief session is seen how candles will help us avoid potentially bad trades. The market makes new highs with doji or small real bodies. We should not be adding to long positions, what we call safety first trading. And this is the premier use of candles, letting you get into the market before the potential big moves. So I want to thank you for joining me and look forward to working with you as we continue down the educational path. And may the candles continue lighting your path to greater profits.